Hello and welcome to another morning briefing from Stein Investments. Let's begin with our volume power overview, and we can see there is some rising interest here in total. So retailers are willing to open new positions, and the most dominating change is here the rising interest in gold long positions, which came up with the London opening, and we can also see that gold rose from the neutral area here clearly into the strength area, and it's doing pretty good. So let's have a look at the gold chart in detail, and you can see it's kind of a breakout scenario here, but with a very strong dollar as counterpart, so the conditions are not ideal. We can see at first there was a drop due to the news at this weekend, the new tariffs US President Trump set for several countries, which shake the markets overall, not just in currencies, also in indices, but this is where we get later on. And so yeah, we have a solid strength here in gold, but we have also a very strong dollar as counterpart, so these are no ideal conditions. There is a new resistance level established here. The market was unable to break through it, so it's possible that we see a short-term reversal, but of course, yeah, the long-term trend is long, at least for maybe the next hours. But anyway, we can also see that the range today already reached 112% of its average. So my conclusion is to better stay out, because this is not promising enough. Maybe I'm wrong, but I'm not willing to risk any money on uncertain setups. So let's continue with our currency overview now. And we don't get any obvious setup here, because the market is going up and down in all currencies due to Trump's tariff decision over the weekend. I don't judge this decision at all. This is perfectly fine for me. But the point is that these political decisions have a serious impact to the market, and the forex market is dominated by the US dollar. It has an influence to all other currencies as well. So there is no stability here. We don't see any stable downtrend or stable uptrend. The British pound tried it at the London opening, dropped to the neutral level, as we can clearly see. The euro was rising before the London session, then dropped back to its long-term short trend. The US dollar gained strength after this decision, but weakened during the last hours. So there is no obvious trading opportunity, and under these circumstances, I prefer to stay out and wait for another trading session with a more clear setup, because situations like this are not worth to risk any money. If we are looking at the major pairs, starting with the Euro USD here, you can see there is a huge gap from the Friday close to the Monday opening, and since then the Euro USD is ranging without a clear direction. Euro pairs in total already exceeded 115% of their usual daily range, and the US dollar pairs are at 96%. It's definitely tricky to trade, to see that the pound against the US dollar is showing the same pattern. US dollar, Canadian dollar, it's the same as well. And it's good possible that the volatility rises and the market becomes more shaky with the beginning of the New York session, because these traders know about what happened at the weekend, but it's currently not reflected in the market by the US traders. So we probably see some up and down here during the New York session today as well. So my advice for now is to stay at the sideline, see what happens, and let this day pass and give it a go tomorrow again. Nonetheless, we'll continue with our analysis of the non-forex trading symbols and start as usual with the Bitcoin, which was also affected by this news event and dropped down to 91,500 US dollars, which is pretty much compared to the last week close at around 102,500. So yeah, that's an almost 10% loss in no time. And this makes also clear how risky position holding over the weekend is. That's why we usually see a decreasing trading volume on the retail side during the Friday trading session, because most experienced retail traders close their positions, avoid the risk, stay flat, and start the new trading week on Monday again, while risky people or gamblers may hold their positions, and then they might be caught by a gap in the wrong direction, and this can lead to an immediate stop out or even a margin call if your position is too big. And I'm also the more conservative trader, closing all its trades before the weekend. So move on to oil. Takes a second until data is loaded. So we can see, yeah, it's in an uptrend, but currently struggling at a massive resistance level. So I don't see any potential here to the upside. And let's see what the Dow Jones does. Okay, and we can also see there is a gap to the downside. Currently waiting for the New York session to start. Let's see how the German shares market reacted. Also with a gap, slightly recovering. Yeah. So I stay with my opinion. I stay at the sideline and look what happens today and give it a go tomorrow again. Please keep in mind, discipline and patience are the keys to success in trading, because trading is a marathon and no sprint, and we don't have to find trading opportunities every single day. We have to judge the circumstances, and if they are in our favor, we can trade, risk our money, and get the profits we desire. And if the circumstances are not good enough, it's also a professional decision to say, I'm out for today, let the market run, I don't have to trade, and I wait for better opportunities. That said, I wish you a great day, enjoy the free time, and I catch you in the next one. See you, bye bye.